Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for the 4th of October here in 2022. We're getting ready for the jobs report, but that comes out Friday. Until then, we had a risk reversal play. So Thursday and last week in the evening videos, just to update, I was discussing the concept of a risk reversal. What is a risk reversal? It's when the market gets oversold, and it's similar. We'll make that a little bit larger on the perspective to what we've seen at prior reversal lows. A risk reversal is just when the market has gone so far to the downside, there is a better risk of the market no longer going down, but of reversing. So from the update earlier, we had the concept of, and the same thing works on the bull side as well, when the market has gone so far, so fast, moved as much as it has, what are the odds or the probability or the chance of the market continuing to the upside versus reversing to the downside? So in this case, the risk is going to be for additional upside action against the reward of a reversal back to the lows. We're seeing the same thing play out on the other side. So after each of these deep pullbacks or deep pro trend new lows, what are the odds of the market continuing off to lows there and a few other examples earlier in the year, or of the risk reversing from the downside to the upside? And that's just 2 days, but nonetheless, it is a 200-point move in the S&P, and that's achieving at least a small target. Another way to look at this is going to be through, we'll pull everything else off the chart. Another way to frame it is, of course, linear regression. To me, I like to use the 50 and the 100 linear regression lines. So within that, we can frame this out as a continuation of the downtrend in motion. And when the market seems to be or trades above these initial spots, the risk reverses as the market turns lower. But the same is true where we're having the conversation and the plays currently. When the market is found to be in the lower bound or at the lower of its falling linear regression trend lines, the risk reverses as opposed to being reward down and risk up. It is actually risk of additional downside action and the reversal. So that's the big picture we want to start with. It is not, in my opinion, the bottom. It is not the end of the bear market, but it is a short-term relief rally, and it could be on the magnitude of what we saw in May, which was, again, about a 400, 300 or so point move in the S&P, and it could be similar. We'll see one more of these. That was into February. That was also about a 300 or so point rally, maybe a 400 point rally. But the other ones were a little bit larger. And this was roughly, we'll say 4100 to about 4600. That was a 500 point counter trend move. This one was much bigger. That was a surprising rally that took the market a little higher than others, myself included, expected it to go. But that was roughly 3.7 to about 4.3. Again, about a 500 or 600, depending on how you count it, point rally. But each time the market did turn back and make those lows. How high will this one go? Currently, we're into the 200 bounce spot, which is about half of this and a little bit on the pathway, 2/3 of that pathway toward that low. So we're watching all this closely. Of course, the same logic will play out in the Nasdaq, which is our tech-centric index. Of course, the Dow mini futures, that's coming off the 29,000 print for the Dow mini futures. And the small cap, the Russell, that's taking place of a risk reversal rally off of 1,650. But there are other things talking about risk reversal, and that is the bond market, which itself, we'll take a look actually at ZN. And again, that ZN, like the equity market, does continue a broader or a fundamental or a larger term downtrend. But that doesn't mean we're going to short with abandon. We actually short on pullbacks, and sometimes they as well go higher than expected. This is just another pullback against a broader downtrend. We'll get ready to talk about the spots to get short and to continue the downtrend in future videos. But for now, we are seeing a relief rally. That's going to be true in the bond market. You'll see the opposite take place in the dollar, which did not have a reversal. It just had a new high, take it back to prior levels. So this is where we are in the situation, at least in the big picture. Markets do not go straight up or straight down. They tend to, as I call it, wiggle and squiggle. And the trades will be for swing accounts on the pullback or when the market stops going down and starts potentially to turn back to the upside. Now that may be a little deeper in the dollar, and that will be the 108 level. The same logic will be here in the TNX, which is our 10-year Treasury note yield, and that peaked at 4%. Again, here in thinkorswim, 40 represents 4. And we see that pullback. Again, linear regression trend lines just help us gauge risk, reward, entries, targets, and the like. We can see that as well in TYX, which is the 30-year bond. So that again has a risk reversal to take it back from the high, not necessarily a all-time high, not a reversal, but just a small risk reversal, which has a pullback. Outside of those markets, we see gold. Now, gold as well has a sideways trading range. Keep in mind the equity market does have a downtrend. Gold has a sideways range, and that will pull that up to the weekly perspective. We'll take it back over to the weekly here and the daily on the left. Gold has its own bounce back inside of key support levels. There was a little bit of a market move under 1,700 per ounce in gold, but that was quickly risk reversed with a rally up from 1,650 back inside of the key or the wide key price levels. That's about 2,000 and about 1,700. Midpoint being about 1,800 for the big picture. And of course back inside the linear regression trend lines. So with that being said, we're seeing the market bounce, but is that the bottom? Again, that's a short-term versus long-term. Think of this as short-term. Think of this as long-term. On this, it can be easily said that could be a bottom, but that would be a quite different perspective here on the weekly chart. Not saying this will happen, but at least expanding your perspective outside of the daily chart. Now, I have a curious interest in this bounce and similar bounces like it. And a quick question I have that will take us into the stock world and some potential swing trades is how many stocks or what percent of stocks or what are the percent stocks that rallied stronger than the equity market. So what I mean by that is the following. The S&P of the last two sessions, from counting off that low about 3620, currently up to about 200 points higher above 1800. This is the S&P futures. The market's up about 5%. Let's keep that in simple terms. In the last two trading sessions, the market has rallied 5%. That's a lot within a few trading sessions. It does happen. And on bear market rallies, still counting this as a bear market rally, you can see quick and violent, multiple days in a row to the upside. That's what I'm quantifying this as. But if the market is up 5%, how many stocks or what are the stocks that outperformed the market? Before we get there, we'll see this. This is a rare picture. We don't see that often. That the advanced decline is close to positive 500. That means just about every single stock in the S&P was positive today. So it will be of interest to take a look at which stocks in the S&P 100 or the 500 gained the most. Which stocks gained the most? General Motors, Ford, PayPal, General Electric, Boeing, Simon Property Group, Salesforce.com, financial company Goldman Sachs, tech company NVIDIA, AIG, and others. Now these stocks in this one session, just by being up today 5% or more, have outperformed the market. But let's pull that back to a 2-day perspective. Which stocks, and this is simply a scan, just quickly on it, it's the rate of change, looking back 2 trading sessions. So today and yesterday, 2 trading sessions. We want to see the percent change of what these stocks were. Quick answer is, if this stock is up more than 5%, it has outperformed or led the market on the rally. The ones that come to the top would include ConocoPhillips, that's a 13% move. General Motors, that's a consumer discretionary, which is a car company, automotive company. Right behind it, Ford Motor Company. But then Boeing, Chevron, Caterpillar, ExxonMobil, right there with ConocoPhillips as an oil or energy stock, and Chevron. And the list goes on. There's NVIDIA. There's a few financials. You can see how the breakdown is of stocks that outperform the market. And another way to visualize this, again, we don't see these days this often, where it's almost completely a 100% up day. So here is our Market Watch Visualize tab and the S&P 500. Quick look at some of the stocks that outperform. They are ConocoPhillips. ConocoPhillips actually continues an uptrend on the daily chart, as does other oil company names, Chevron. And we see that Chevron did the same in terms of its play. Chevron Texaco has an uptrend. These are rising linear regression lines, but so does ExxonMobil. Outside of that, we have car companies that don't look like this. GM is only punching up off these lows, as is Ford. But as the video comes to a close, there's one other car company or automotive company that's worth mentioning. It's Tesla. Tesla, despite all the green, is actually down in the last 2 trading sessions. And it has a small, not as much as other tech stocks. That would include, we'll take a look at Amazon. We'll take a look at, of course, Facebook, which is now Meta, much more weak. NVIDIA, another stock that's weak in those downtrending lines. But back to Tesla. So Tesla does not necessarily have such a downtrend, but it is falling off and is underperforming the market. One stock that isn't, and it's a headline news, that's Twitter. As Elon Musk has agreed to purchase Twitter at these upper levels per share. So we'll watch the headline news as that takes place. Of course, that was a big shock to the system and a big positive event for Twitter shares as they jumped on that acquisition news. We'll keep watching this space. We'll keep watching other things in the market as we continue to bounce with a risk reversal. And of course, we'll get more information on the jobs report a little later in the week on Friday. And as always, be careful and safe. This is Corey Rosenblum with tonight's video update for October 4th, 2022.